Welcome to the Compliance 911 Show, a no-nonsense podcast discussing hot topics for today's busy compliance professional. It's everything you wanted to know about regulatory compliance, but we're afraid to ask. And now, here are your hosts, Dean Stockford of M&M Consulting and Len Suzio of Geodata Vision.
So Len, here we are today recording our 78th and 79th podcast. What interesting topic do you have for our audience?
Well, Dean, in the last week I read a terrific article published on June 10th in the National Mortgage Professional magazine. It was called Manufacturing Fair Lending, and it's an article that every compliance professional should read. The article includes interviews with some very, very impressive folks, including Paul Hancock, former chief of the Housing and Civil Enforcement section at the Department of Justice under Attorney General William Barr, and Brian Montgomery, former deputy secretary of the Department of Housing and Urban Development. The main point emphasized in the article is that there is a new, quote, modern theory of redlining, end quote, introduced in the Combatting Redlining Initiative that was announced by Attorney General Merrick Garland back in October of 2021. The article was so insightful that I wanted to discuss it today and to make listeners aware of a follow-up article that I published on June 16th called Redlining Isn't What It Used to Be, that can be found on the Geodata Vision website and also on the JD Super website. I hope to provide some very provocative quotes as we discuss the article today.
Well, I will say, Len, I've already read it because I love to follow you and follow your article. So it was really, really good. But what is the modern theory of redlining?
Well, according to Paul Hancock, it's the government demanding racial balance in loan originations. Hancock in the article says, quote, if the government's actually demanding a racial balance in loan originations, saying, for example, all lenders in the city of Chicago should make 20% of their loans in minority neighborhoods, that's a demand for a racial balance, and it's prohibited by the Constitution, end quote. So Hancock isn't the only expert to declare and question this new theory of redlining. Steve Simpson, director of separation of powers and litigation for the Pacific Legal Foundation, in the article was quoted as saying, quote, lending disparities, which regulators call redlining, differ greatly from the literal practice from which the term originated. According to Simpson, quote, any disparity in a bank's lending to one group or another is just held in the modern theory of redlining to be de facto redlining. And Simpson adds, accusing lenders who originate a below average number of originations or mortgages in CRA-eligible census tracts of redlining without demonstrating a lender's intent to avoid or otherwise restrict access to mortgage credit in those communities, it manufactures perceptions of discriminatory lending while pushing lenders to, quote, manufacture their fair lending compliance. So that's what manufacturing redlining, the new modern theory, is all about.
Len, you and I have had several discussions about the radical changes in the redlining enforcement, fair lending enforcement overall. And Hancock and Simpson seem to echo the points that you and I have been making for more than 2 years now.
Yes. Yeah. In fact, I've been working with a few banks who have faced some very tenuous redlining allegations. And my experience tells me the regulators have abused statistics to make it appear that a bank may be redlining. As Simpson says in the Manufacturing Redlining Fair Lending article, quote, the problem arises when they, the regulators, start inferring discrimination from statistics when they don't have any direct evidence of discrimination, end quote. And the ace in the hole for regulators is that no matter how weak their case, they know that the mere accusation of redlining and the threat of referral to the DOJ can intimidate a bank into entering a settlement agreement, even if they're not guilty of redlining. And adding to the headaches and the exorbitant expenses is what Brian Montgomery, a former deputy secretary at HUD, calls what he calls the, quote, whipsawing regulations that means businesses must remain ready to pivot at all times, depending on the regulatory priorities of the day based on what administration is running the show in Washington. So today we've got the Biden administration. I know a lot of people are hoping for a change in administration next year, but even if that does happen, and even if it does provide some kind of regulatory relief, there's no guarantee that 4 years later there won't be a new administration that goes back to the emphasizing the modern theory of redlining again. So there is this inconstant application of the theory, which makes it even more difficult for lenders to know whether they're going to be accused of redlining or not.
So, Len, is this modern theory being applied by federal agencies other than the prudential bank regulators?
Yes, effectively, HUD has been using a parallel approach, which has become clouded by court litigation and statutory changes from the Obama administration to the Trump administration and now back to the Biden administration. This is the whipsawing phenomenon cited by Montgomery in the article. In the 2013, HUD implemented its, quote, discriminatory effects rule to formalize disparate impact liability. Two insurance industry trade groups sued and temporarily succeeded, but a new HUD rule, the 2020 Fair Housing Act rule, was implemented during the Trump administration and supplanted the 2013 rule. So fair housing groups then challenged that rule and won a preliminary injunction. But then the Biden administration came back and reinstated the 2013 rule in 2023 without making a single revision to it. So the battle seesaws back and forth at HUD, and the litigation is proceeding again. What's a banker to do?
Yeah, and I don't have a great deal of confidence in the legal system currently. But
No.
Len, this theory, is there any hope for relief at some point?
Well, in 2015, the Supreme Court ruled in the quote, the Texas Department of Housing and Community Affairs versus the Inclusive Communities Project, that the plaintiffs must meet a rigorous standard to establish a clear-cut case of disparate impact discrimination under the Fair Housing Act. The justices observed that claims based on statistical disparities fail without showing robust causation. In other words, the plaintiffs face a significant burden of proof. Moreover, there's a series of court cases that are near decision today as we're recording, and by the way, some of which may be decided by the time this episode of this podcast is broadcast, that could bear on these issues. Legal experts that I know believe that the Supreme Court may soon issue rulings that curb the new modern theory of redlining.
Len, you say you've written another article on this topic. What's it called and where can people read it?
Yes, the article is called Redlining Isn't What It Used to Be. And in it, I referred to some of the folks quoted in the Manufacturing Fair Lending article that we're discussing today. In my article, I talk about what I consider to be abusive statistical analysis used by the regulators and the DOJ. For example, I talk about Simpson's paradox and the expansive interpretation of the REMA, or the Regionally Expected Market Area concept, announced by the regulators in 2022, shortly after the Combatting Redlining Initiative was proclaimed by Attorney General Garland. It's important for all lenders to be aware of how Simpson's paradox may apply in their situation, and it's especially important to understand how the new interpretation of a REMA can generate not only unreliable, but misleading statistical significance conclusions.
So, Len, what advice do you have for our listeners regarding the redlining situation today?
Well, first, I would encourage banks to self-evaluate their potential exposure to redlining allegation. It's not difficult to do. I point out that one of the legitimate criticisms of banks that have been alleged to be redlining is in many cases they apparently didn't have any internal risk assessment process to identify potential redlining. So it behooves all banks to initiate a redlining risk assessment process as soon as possible. Second, I would suggest that banks believe they are being unfairly accused of redlining. They should contact and retain competent counsel and a consultant capable of rebutting a flawed statistical significance conclusion. I think the financial services industry must be more aggressive in combating potential regulator abuse. As Paul Hancock commented in the article, quote, lenders' inability or unwillingness to litigate against the government, given the expense, inflates perceptions of rampant redlining and the effectiveness of regulators combating redlining efforts. So the string of settlements with the DOJ creates a bad and misleading public perception of the controversy. Now, of course, it's easier to oppose abusive government practices when the industry acts in unison, rather than letting the regulators attack institutions one by one. There is strength in numbers, as the saying goes, and I've seen signs that the ABA and other industry groups are starting to fight back. I would suggest that bankers today that are listening today contact their industry trade associations and encourage them to oppose the modern theory of redlining.
Well, this has been a very interesting conversation, to say the least. I know you and I have had many conversations about this, and I'm sure we'll have many more. So thanks for enlightening our audience today, Len. This is Dean
Yeah,
Stockton.
and I hope we're going to be, Dean. I hope that we'll be discussing it at your regulatory compliance school in September in Portland that's sponsored by M&M.
Yeah, sure thing, Len. We certainly are. I know this is something that will be on the agenda. So thank you again for the information today. This is Dean Stockford from M&M Consulting.
And this is Len Suzio of Geodata Vision saying thank you for listening in today. And as always, please let us know of any subject you would like us to address in future podcasts.
Thanks for listening to the Compliance 911 Show. If you like the podcast, be sure to subscribe so you don't miss an episode. While you're at it, please give us a like and review to help others find the show. As always, links are in the show notes, and you can always find us online at compliance911show.com. Follow M&M Consulting and Geodata Vision on LinkedIn for all the latest news and information on compliance hot topics.